Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news. It's Friday the 13th, so don't expect too much from the day. First up, the actual number of American jobless claims last week were 178,000, a one-year low, and taking the total number of people on these benefits to 1.7 million, a 9-month low. But the seasonally adjusted level reported was 230,000. It's unclear why the variance is so large this week. Meanwhile, American producer prices rose 1.7% in the year to August, the lowest in 6 months, easing from a downwardly revised 2.1% gain in July. Their core PPI rose 2.4%, emphasising the role much cheaper energy costs are playing in keeping inflation down. And India's inflation rate rose to 3.65% in August from an upwardly revised 3.6% in July, which was the lowest since August 2019. But the August level was above forecasts of 3.55%. However, these levels are below the RBI's targets, and while food prices are still rising at 5.7%, that is down from year-ago levels of 9.9%. It is this base effect change that is making overall price increases look low. In China, markets are expecting some significant cuts for interest rates for home loan borrowers soon. These were signalled earlier, but are now imminent. At the same time, Beijing is rounding up investment bankers, taking passports, investigating them for corruption. Despite all this, their government bond sector is rallying sharply today in defiance of Beijing's efforts to calm matters. Equity prices are falling too, also on the uncertainty, and in contrast to what is happening in other global markets. And as expected, the ECB cut its policy rates, but they varied a lot this time by type of facility. The deposit rate was cut by 25 basis points to 3.5%. They see a better inflation outlook and better transmission of policy. But they're also facing a weaker level of economic activity in the bloc. And it seems the Australian Central Bank is right to be sceptical inflation is trending the way they need it to. Consumer inflation expectations are still at 4.4% in September in Australia, only slightly down from August's 4-month high of 4.5%. And world container freight rates fell rather sharply last week, down 13%, as the shipping industry adjusted to the Suez Canal risks and the Panama Canal drought impacts fade. Prices were down 13% last week from the week before to be only double what they were a year ago. This is counted as progress. The US Treasury 10-year yield is now just on 3.68% and up 3 basis points from yesterday. And the price of gold will start today up a significant $40 from yesterday at $2,554 an ounce, and almost touching the record high of $2,555 an ounce on September the 12th. In fact, right now, it may have bested the all-time high level. Oil prices are up another $1.50 at just on $69 a barrel in the US, while the international Brent price is now just over $72 a barrel. And the Kiwi dollar starts today at 61.6 US cents and 30 basis points firmer from this time yesterday. Against the Aussie, though, we're down 10 basis points at 91.9 Australian cents. Against the euro, we're 20 basis points firmer at 55.8 euro cents. That all means our trade-weighted index starts today at 69.5 and 20 basis points higher from yesterday there too. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.